Assalamualaikum and hi everyone. Thank you for coming to Top Close Interim and Segmental Reporting Presentation Day. Me and my team will give our best and full information throughout the presentation. I am Siti Khadijah binti Muhammad Yusuf, the new appointed leader of Account Executive Team of the company.
Assalamualaikum and hi everyone. I am Nurfatin Alia Rizkafli as a new appointed Executive Accounting in Top Glove. Previously, I worked as a junior accountant in Sunway Berhad for 5 years, so I'm looking forward to contribute more and learn as much as I can from this company.
My name is Nur Kamilia binti Zuraini. I am the Chief Finance Officer of Top Glove.
Assalamualaikum and hi, my name is Siti Aisyah binti Ibrahim. I am the new member account executive of Top Glove Corporation Berhad. Previously, I am the management accountant for Top Glove for about 3 years. I hope that I can make the greatest contribution based on skills and experiences that I have gained throughout the years in this company. Last but not least, thank you everyone for making your day to come to Top Glove Segmental and Interim Reporting Presentation.
Top Glove company background. Top Glove is a Malaysian-based company that was established in 1991 by Lim Wee Chai. It is the world's largest rubber glove maker that produces latex and nitrile gloves for providers and manufacturers as well as the households. The company, Top Glove, has exported their gloves to over 2,000 customers in 195 countries in the world. The company has expanded their business in all over countries and mainly in Asia. The countries in Asia that they are very active now is in Malaysia, Thailand, China, and Vietnam. The company has conquered 26% of the world market share for rubber gloves. Top Glove were also listed as main market of Bursa Malaysia in 2001 and the main board of the Singapore Exchange in 2016. Top Glove now has shown a very steady development with a compound annual growth rate CAGR of 23.1% for revenue and 28.2% for profit after tax in the past 20 years. The company usually closed its account at the end of the year every 31st August. As of 31st August 2021, Top Glove has obtained revenue of RM 16,402.95 million ringgit and net income of 7,870.87 million ringgit. And the company's vision is to be your world-class partner in gloves and healthcare products. Meanwhile, their mission is to ensure the safe human protection globally.
Now, let's take a look at the factors to be considered having a segment report. The first factor to be considered is the nature of the business. A segment of the entity may engage in the business activities from which it may incur expenses and earn revenue, which is also included the intercompany revenues and expenses. Top Glove Corporation Berhad is an investment holding company which is engaged in the manufacturing and trading the rubber gloves. Top Glove Berhad operates in 3 principal geographical areas around the world and is primarily involved in the rubber gloves manufacturing industry. The second factor to be considered is the existence of managers responsible for the activities. Each of the operating segments should have a manager that will take the responsibilities in ensuring the performance of the company and reviewing the operating results of its department or segment activities before it is being regularly reviewed by the chief operating decision maker to make the decisions. Lastly, the information presented to the board of directors is also one of the factors to be considered having a segment report. The company's board of directors are the one that will be assessing the overall performance of the company and also to make the decisions about the resources to be allocated to the segment. The chief operating decision maker will use the information provided earlier to make the decisions. For example, if the chief operating decision makers is regularly provided with information on liabilities for its operating segment, then these liabilities should also be reported on a segment basis.
Basically, there is 2 types of segment. which is business segment, and geographical segment. Business segment is distinguishable from an entity and is involved in providing product or service or group-related product that is subject to risks and returns that are different from other business segments. Top Glove has no business segment since the group is principally involved in the glove manufacturing industry. The second one is the geographical segment. It is a part of an entity that is distinguishable by the involvement in providing product or services within a particular economic environment and is subject to risks and returns that are different from those components operating in other economic environments. Top Glove segmental report is separated according to three principal geographical areas, which are Malaysia, Thailand, and China. Next, we will proceed to the Chief of Decision Maker and its responsibility. So, who is our Chief of Decision Maker? Our Chief of Decision Maker is Tan Sri Dr. Lim Wee Chai, who is the Executive Chairman and also the founder of Top Glove Corporation Berhad. He graduated from Universiti Selangor Bestari Berjaya, Universiti Malaya, and Suro State University. In October 2020, Lim was conferred an honorary Doctor of Philosophy degree in Business Management by University of Sabarjaya and appointed as an honorary professor of the university. So, what is the responsibility of Chief of Decision Maker? According to MFRS 8 operating segment, Chief of Decision Maker is responsible to review the operating information and result of entity to make decisions regarding allocation of resources to segment. Next, decision making of Chief of Decision Maker is also important for making assessment on the performance entity's business unit.
Reportable segments are business segments for which the information required by MFRS 8 are to be disclosed separately. In determining reportable segments, the management requires to use two judgments, that is, quantitative 10% threshold test and 75% total revenue requirement. 10% threshold test consists of three, that is, revenue basis, profit or loss basis, and asset basis, in which in these three tests it needs to reach 10% or more to be considered as reportable segments and to be disclosed separately. Top Glove Berhad is using revenue basis in measuring its operating segments. It will be reported separately if the reported revenue, which are the sales to the external customers and inter-segment sales, reach 10% or more of the combined revenue of all operating segments. After that, the entity required to do the 75% total revenue requirements. The external revenue of the reportable segments must be 75% or above of its total revenue. However, if the external revenue of the reportable segments is less than 75%, then additional segments must be reported until it reaches the threshold. The additional segments is identified and reported even if it does not meet the 10% threshold test. Based on the calculation of the 10% threshold test on the original segment revenue, there are only two reportable segments and two non-reportable segments. The operating segments of Malaysia and Thailand are the reportable segments that falls under the 10% threshold test, with the results of 83% and 10% respectively. Meanwhile, China and others does not qualify for reportable segments because the results are less than 10% and are to be combined together and disclosed under all other segments category. In order to meet the requirements of 4 reportable segments and a minimum of 1 non-reportable segments, Top Glove Berhad has came up with a new segment revenue as stated on the screen. There are additions of 3 new operating segments, which are Philippines, Indonesia, and Japan. With these new operating segments, now Top Glove Berhad has 4 reportable segments, which are Malaysia, Philippines, Indonesia, and Japan. And there are 3 non-reportable segments of Thailand, China, and others. Next, these reportable segments must have at least 75% of external revenue. Based on the calculations, the external revenue exceeds 75%, which is at 92.55%. Since the reportable segments exceed 75%, therefore, no additional segments are to be reported.
So for the comparison, the new segmental report, by using the adjustment of new operating segment, there will be a changes in reportable status. As per the calculation, by using the revenue basis, there will be 4 reportable segments as the stated percentage are exceeding 10% of combined revenue of all operating segments in Top Glove. That comprises Malaysia, Philippines, Indonesia and Japan of 42%, 15%, 24% and 11% respectively. However, for Thailand, China and other segments will be reported as all other segments as they failed to meet the 10% threshold test requirement according to the revenue basis. But somehow, in Top Glove, we believe that this information in non-reportable segments are significant to the users of the financial statements, since the company can choose to include Thailand, China and other segments as the reportable segments by applying the 75% test rule. Since the 75% test rule has been satisfied by the Top Glove of 92.55%, therefore they can simply ignore the Thailand, China and other segments.
The advantages and disadvantages of segment reporting. The first advantage of segment reporting is profit-making and loss-making units can be easily identified by investors using segmental reporting. This is because it provides investors with the complete details about the units and their profitability. Therefore, it will be easier for the investors to make decisions and analyze the best investment in the organization. Second advantage, it helps the organization with optimizing utilization of resources. Segmental reporting will help in the decision-making process of the managers, whether a segment needs to be closed down or retained. And the third advantage of segment reporting is that it will be very useful for potential investors to make an investment, whether to make an investment or not in the company, since it allows the potential investors to see a full picture of a company and make judgment of the financial abilities of the company before they make an investment. The disadvantages of segment reporting. The first one, data presented might be misinterpreted by financial statement users. This is due to not every financial statement users are able to interpret and understand the information presented correctly. Secondly, the process of preparing a segmental reporting is very time consuming, since the cost should be apportioned in accordance with its segments. And the last one, the common costs are sometimes difficult to be allocated. Common costs like depreciation on machinery is hard to be allocated if the company prepares its segmental report based on business. The basis of presentation of interim report. There are two bases of presentation to be chosen when a company wants to prepare their interim report. They are integral method and discrete method. Integral method, the interim report is a fraction of the annual report, and the annual values will be timed with the fraction of the reporting period. As for discrete method, the interim period is separated from the annual financial statement, and the financial reports are prepared on periodic basis, such as on quarterly or half-yearly. Top Glove has chosen the discrete method as the basis of its interim reporting, in which the financial statements are prepared quarterly. Accounting policies used in preparing interim report for PPE and inventory. Property, plant and equipment is stated at cost and net of accumulated depreciation and accumulated impairment losses. Depreciation is computed on a straight line basis over the estimated useful lives of the assets. As for inventories, they are valued at the lower of cost and net realizable value. Net realizable value is the estimated selling price of the ordinary course of business, less estimated cost of completion and the estimated cost necessary to make the sale.
We will proceed to the type of interim report prepared by the company. Top Glove prepares its interim report based on quarterly basis, in which it presents a collection of unaudited financial statements consists of balance sheet, income statement and statement of cash flow for every 3 months in a financial year. For financial year 2021, Top Glove has managed to come up with their last interim report, which is the 4th quarter ended 31st August 2021. Financial statement prepared by the Top Glove is condensed consolidated SOPL for the 4th quarter ended 31st August 2021, condensed consolidated statement of comprehensive income for the fourth quarter ended 31st August 2021, condensed consolidated SOFI as at 31st August 2021, condensed consolidated SOCHI as at 31st August 2021, and the last one is condensed consolidated SOCF as at 31st August 2021. Period for the current and comparative of each statement prepared by the company. According to MFRS 134 interim reporting, the period for the current and comparative of each statement prepared by the company will be measured from 1st June 2021 to 31st August 2021. That is equivalent to the fourth interim quarter of Top Glove in 2021. As for the statement of financial position, at the end of current interim SOFI reporting period is 3 months from 1st June 2021 to 31st August 2021. And then for the comparative SOFI of the end of the immediate preceding financial year, reporting period is 12 months from 1st September 2019 to 31st August 2020. And then for the statement of profit and loss and other comprehensive income, current interim SOFI and OSCE, reporting period is 3 months from 1st June 2021 to 31st August 2021. And then for the cumulative SOFI and OSCE for the current financial year to date, reporting period is 12 months from 1st September 2020 to 31st August 2021. And then for the comparative SOFI and OSCE, current interim reporting period is 3 months from 1st June 2020 to 31st August 2020. And the last one for the comparative SOFI and OSCE of immediate preceding financial year is 12 months from 1st September 2019 to 31st August 2020. As for the statement of changes in equity and the statement of cash flow, both of the statements have exactly the same reporting period and reporting date. Cumulative SOCHI and SOCF for the current financial year to date is 12 months from 1st September 2020 to 31st August 2021. And then for the comparative SOCHI and SOCF for immediate preceding financial year to date is 12 months from 1st September 2019 to 31st August 2020.
So now we are moving on to the last part of this presentation. In this part, we will make two adjustments in the fourth quarter by using the statement of financial position as at 31st August 2021. The first adjustment is depreciation. As it is stated in the statement of financial position, the cost of plant and equipment of Top Glove is 2.466 billion with its accumulated depreciation of 1.005 billion. The company, Top Glove Berhad, differentiates all of its plant and equipment using the straight line basis over the estimated useful life of 10 years. However, Top Glove Berhad has disposed one of its equipments on 1st June 2021 at a carrying amount of 300 million with no profit recognized while disposing this asset. Initially, this asset was purchased on 1st June 2019 at a cost of 500 million. Therefore, as per MFRS 116, the carrying amount of the plant and equipment that will be presented in the statement of financial position as at 31st August 2021 is 964,400,000. Next, moving on to the second adjustment, which are inventories. The cost of inventories as at 1st September 2020 is 994 million. As for the net realizable value (NRV) of the inventories in the second, third, and fourth quarter were 900 million, 1.5 billion, and 900 million. At the end of the second quarter, which is on 28 February 2021, the value of the inventories should be written down to its NRV of 900 million in the statement of financial position (SOFP), as it is lower than its cost of 994 million. The loss of inventories of 94 million should be recognized in the statement of profit or loss and other comprehensive income. For the financial year end in the third quarter, the value of the inventory should be reversed up to its cost of 994 million in the statement of financial position, as it is lower compared to its net realizable value of 1.5 billion. The loss of inventory that recognized in the statement of profit or loss and other comprehensive income in the second quarter should be reversed back in the third quarter of the statement of profit or loss and other comprehensive income. However, at the end of the fourth quarter, the NRV of the inventories was lower as compared to its cost of 994 million. Therefore, the value of the inventories should be written down to its NRV of 900 million in the statement of financial position, while the loss of inventories should be recognized in the statement of profit or loss and other comprehensive income. So, here is the abstract statement of financial position as at 31st August 2021 after the adjustment. In order to prepare the statement, we are required to record it based on two dates, which are current interim and comparative. For the current interim, it is referred to the current quarter starting on 1st June 2021 until 31st August 2021. Meanwhile, comparative is referred to the period of soft P at the end of immediately preceding financial year 2020, which was starting on 1st September 2019 until 31st August 2020. I think that's all for our presentation today. Thank you for listening.